Hey, welcome back to YT Finance, and today we are talking about SoFi Technologies SoFi stock and Palantir Technologies PLTR stock. The first article that we are going to be analyzing today in regards of SoFi Technologies is their upcoming earnings estimates and results that will be released on November 1st. So we're going to be going over their odds of beating their overall revenue forecasts as well as their earnings predictions ahead of their Q3 results. Then after that, we're going to talk about how Palantir has landed and extended their partnership with the FDA and if Palantir is still a good buying opportunity. On top of going over the latest stock news updates for these various companies and businesses, we will also be talking about their latest price predictions and price targets among professionals. So if you want more videos on SoFi Technologies, Palantir Technologies, or if you want to know how I personally grow my own portfolio, stick around for Thursday and Friday's video where I will be showing you a deep dive into my personal portfolio that I plan to reach $100,000 in the next year or so. So for more videos like this one, go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and now let's jump right into today's stories. So SoFi Technologies is a fintech company or a financial technology company that offers an all-in-one inclusive digital app to their consumers, which gives them access to various financial services and financial products. Currently, the SoFi stock price trades for $5.62, while analysts believe the company should be trading anywhere between $6 and $11 over the next 12 months. Arguably, that means the current stock price is trading at somewhat of a discount compared to what Wall Street is saying that the company is worth. Today, the current stock price has surged by almost 10% in their share price because the overall stock market is starting to rally. However, I don't think this rally will be going on for much longer because I do anticipate a pullback in the overall economy, the stock market, and this particular stock again. I think we are in the middle of a false rally, but hopefully, I actually hope I'm wrong and that the stock market recovers and goes into a full-on rebound. But with that being said, let's dive in and talk about some SoFi projections. SoFi Technologies is expected to deliver a year-over-year decline in their overall earnings, but they are anticipated to beat on their overall revenue forecasts. On November 1st, which is when they are going to be going over their Q3 earnings report, this might help the stock price move higher after the report if they beat on earnings as well as revenues, as long as they bring in metrics that are above expectations. The current expectation is for SoFi Technologies to bring in a quarterly loss of 10 cents per share in regards to their EPS and around $391.84 million in terms of their revenue. Their revenue would represent a 41.4% increase year over year from the same quarter, while their EPS would represent a loss of 100% in terms of their EPS. Now, analysts are anticipating that although the company should beat their overall revenue projection, bringing in more than $392 million, their EPS is supposed to either meet or be below expectations. But if this company beats in both their EPS as well as their revenues, this is supposed to be extremely positive for the overall stock price. Analysts have actually become more bullish and positive on this particular company as the company's earnings report approaches. And even Zacks Rank, which has issued their estimates and projections for this particular company, has a buy rating on this stock, rating it a number 2 out of 5. And if you're not familiar with how Zacks ranks companies, they have a scale from 1 to 5, 1 being a strong buy and 5 being a strong sell. So 1 would be a strong buy, 2 would be a buy, 3 would be a hold, 4 would be a sell, and 5 would be a strong sell. So it's really good that multiple analysts as well as various financial institutions, including Zacks Rank, have actually said to buy this company. Also, if you're not familiar with, Wall Street overall has a buy rating for this company amongst a few pessimistic analysts, but overall, the average stock price target for this company is above $8, on top of the company having a buy rating, which is very positive for this particular company. I'd also want to point out to you that over the last 4 quarters, in terms of their EPS and revenues, the company has actually beat consensus EPS estimates 2 of those 4 times. so about half the time they beat on their EPS forecasts, and if they beat on their EPS forecast again, this could cause the stock price to further increase. Now, for me personally, I don't really care whether or not they beat on their EPS or their revenues. Why? Because the current macroeconomic is very negative right now, and even if they do beat on their EPS as well as their revenue forecasts, the company's stock price will only stay elevated for a short amount of time before then falling back down. The only way SoFi Technologies would be able to hold on to their overall stock price appreciation would be when the macroeconomic and the overall economy officially recover, and clearly we are still not in the recovery phase of the economy. This is also the same reason why I believe that the stock market will continuously fall despite the current rally that we are in. If you're watching this video after the rally, clearly the rally would not be sustained, and I anticipate that the overall stock price for SoFi stock, Palantir stock, and many other stocks and the overall general stock market will eventually fall back down from this recent rally. If you look at the overall stock price appreciation of the S&P 500, which is a phenomenal stock market benchmark, you can see that the stock price would fall and then it would increase, and then it would fall further and then it would increase, and then it would fall further and then it would increase. These are known as dead cat bounces, to where the stock price is going to fall in the overall stock market and then it's going to increase slightly just to fall lower. And I think we are in this current pattern right now, and we haven't encountered anything in the overall economy that would verify or justify a full-on stock market rebound. I personally think that the overall stock market will rebound once the Federal Reserve stops increasing interest rates, but in the meantime, this short-term pain is necessary because as they increase interest rates, this will get inflation under control, which is far worse than raising interest rates. So until the Federal Reserve gets inflation under control and lowers interest rates, then I don't anticipate a stock market rebound. But after that happens, then yes, I believe the stock market will rally and maintain their overall gains. In the meantime, focusing on SoFi Technologies, this company appears to be extremely resilient and a pretty good earnings beat candidate for the upcoming earnings report, even though I don't think they will beat in their earnings. However, with that being said, investors should be paying attention to this company and not bet too largely on this company during this negative macroeconomic environment. Right now, it's best to just acquire shares but not overexpose yourself at a cheap price and wait this thing out until the economy turns positive. One of the only exceptions to this would be if you're a stock trader and you are going to trade off of the short-term volatility, and if you are very confident that SoFi Technologies will beat both in their EPS and the revenue forecasts, this would cause the stock price to surge upward to where, yes, you could technically bet off of that, but for me, I'm into investing, not gambling or betting on what the company will do in the short term. I like to analyze the company's fundamentals and financials to see where this company could be over the long term. But with that being said, I would love to hear your comments down below. Moving on to our next story, we're going to talk about how Palantir Technologies, ticker symbol PLTR, has expanded its partnership and its networking capabilities with the Food and Drug Administration. If you're not familiar, Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government agencies. Right now, the PLTR stock price is trading at $8.62, while professionals in this space believe the company should be trading anywhere between $6 and $20 over the next year. Palantir Technologies is technically trading at a premium right now, however, we will talk more about that in our next article that we will be analyzing. But for this FDA article, we're just going to go over a couple bullet points. Clearly, Palantir has already had upstanding and outstanding agreements with the FDA, and they are further penetrating and capitalizing on their relationship. The FDA has recently awarded Palantir a $22 million contract to expand their work with them on a new initiative called the 21 Forward Initiative, and this 21 Forward Initiative will also help the FDA identify areas of possible disruption that the economy is experiencing in the food supply chain, and one of Palantir's best products to do this would be Foundry, which can identify various bottlenecks and optimize supply chain chains. Many other industries actually use Palantir's technologies to optimize their own supply chain. So I think overall, this is going to be very good for both the FDA, the economy, as well as Palantir Technologies. And with that being said, I am very excited for this overall development. Lastly, we're going to talk about how Palantir Technologies could surge once they get out of the 1 to 2 year hard times that they are going through. Right now, the current consensus is that the PLTR stock will remain relatively flat, with the stock price rising and falling anywhere between $6 and $10 over the next 2 years. But let's see how accurate that statement actually is. So we're going to determine when Palantir could reverse their current bullish trend over the next year or two. Multiple analysts believe the company could potentially break out from this negative downward trend in the next year, but let's actually take a look at this. Palantir's government business is growing at a substantial clip compared to their other segments. However, like I predicted almost 2 years ago, I predicted in one of my first Palantir videos that Palantir's commercial segment will be the thing that eventually makes the company profitable, and their commercial business will be bringing in larger amounts of revenue than their overall government business. And that's exactly what we are seeing the start of. Their commercial business has started growing faster than their government segment, particularly past the first half of 2021, and this trend is continuously going on well into the first half of 2022. I also want to say that this is very good that the company is doing this, because if the government stopped having a need for Palantir's technology, they could literally lose most, if not all, of their government contracts. If we look on screen here, we can see that from Q2 of 2021 to Q2 of 2022, their overall percentage bases in terms of their revenue that each segment of their business has acquired. Originally, their government revenue was very strong, coming in at 66%, then falling to 34%, then falling again to 26%, then again to 16%, and then again to 13%. Clearly a negative decrease in their overall government revenue. But on the flip side, we see their commercial revenue actually growing. It went from 28% of their overall revenue in Q2 of 2021 to 37%, to 47%, to 54%, and then a slight pullback recently due to the negative macroeconomic environment that we are in right now to 46%. Overall, the total revenue has also been hit very hard due to their lack of government business, because they were originally growing at 49%, then it dropped to 36%, then it dropped to 34%, then it dropped to 31%, and now it's at 26%. This is also very bad because management originally forecasted a 30% CAGR from 2021 through 2025. But honestly, it's too soon to tell, because Alex Karp still believes that the average will be somewhere around a 30% CAGR. Regardless, anything over a 24 to 25% CAGR is still very impressive. Palantir is showing very robust growth in their overall commercial business, and they are incorporating more and more contracts and more products and services that they can give out to various agencies. However, their gradual reduction in their long-term government contracts is something to keep in mind. It's a huge risk for this company. And here's why I say that. The United States government is literally working on developing their own data mining system like Raven. And this is going to eventually replace Palantir's solutions with an in-house solution from the government themselves. This is going to be catastrophic for Palantir Technologies if Palantir does not adapt, or if Raven is substantially better than Palantir's Gotham solutions. So that's clearly something to keep in the back of your mind, because if they lose their overall government contracts, this company most likely will not recover in the long term in terms of their overall stock price. I'd also want to point out one more bearish and negative aspect of this company, and that is their overall losses and how they are continuously widening. On a generally accepted accounting principles basis, also known as a GAAP basis, the company's net loss has widened from just $580 million of a loss in 2019 to $1.17 billion in 2020. However, current projections from analysts, professionals, and experts in this space say that this will shrink back to around 502 million throughout this year, and although it's going to stay more in the red from now until 2024, there is talk, particularly from management and the CEO, who is Alex Karp, that believes and projects the company will become profitable on a GAAP basis by 2025. So if you are a very conservative investor, you may not want to add or buy more of this company until 2024 to 2025, determining on where the current stock price and where the current company is at that time. In the meantime, management expects revenue to increase on a compounding annual growth rate between 23% and 24% this year, but still anticipates to generate $4.5 billion worth of revenue by 2025, which is very positive. The CEO, Alex Karp, also believes that the next 10 years are going to be more dangerous than the previous 10 years, and that's actually going to reflect very positively on Palantir. So I'd also want to point out that Palantir has signed some new deals with the US Army and Hertz recently that we have talked about in previous videos over the last few months, but the problem is that we are not going to see the fruits from these contracts in the upcoming earnings report, which is going to be on November 7th. So what does this say about the Palantir stock price? Well, honestly, current projections anticipate, like I said earlier, for the PLTR stock price to remain relatively flat over the next year. And some believe it will remain flat over the next 2 years. But once 2024 and 2025 come around, when the company is closer to profitability, that's the time where the stock price is most likely going to ignite. By 2023, they anticipate that their revenues will be around $2.37 billion, and if we base their price-to-earnings ratio and multiple off of those future expectations, the company is trading at around 7 times their PS ratio, which is still not cheap. Even if we take their current stock price, the company is trading at a rather high price-to-sales ratio, especially if we compare them to other companies such as Twilio, which is trading at only 3 times this year's sales, while growing their company's revenues at 36% and 28% this year and the year after. Also, companies like Unity Software are also growing at a compounding annual growth rate in terms of their revenue for 2022 and 2023 at a 20% CAGR, but they're only trading at 5 times this year's sales. Now, let me disagree with this author adamantly that I don't think it's fair at all to compare Twilio or Unity Software to Palantir Technologies. I think these are too different to compare like that, because if we compare like to like and apples to apples, Palantir actually has one of the lowest PS ratios compared to their overall space. And with that being said, that would make Palantir Technologies one of the best data analytics software companies to buy at the current stock price. However, I personally think it's still trading at a premium, and I do believe that the stock price could fall lower, so I'm going to wait for a better deal on this particular company in the short term. But I would love to hear your thoughts down below. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.